Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Economic Weather Report. Today we're looking at some interesting trade stats which show in April our trade deficit was $334 million. Now that compares with a deficit of $44 million in March and $215 million in April a year ago. And the Economists had expected $150 million. So this deficit was twice as bad as economists had forecasts. What's going on here? Now we've got some strong exports going on from the Tui oil field off Taranaki, and obviously the dairy sector is still going strong, so exports are actually still pretty strong. Imports though, we had a couple of big imports of oil ships and oil production platforms, and those combined were worth $477 million. So there's a couple of big one-offs that distort these figures. But let's have a look at more detail on the figures, particularly at the consumer goods numbers. They show that consumer goods imports in April were up 14% from the same month a year ago. Now people look at the consumer goods imports figures closely because they show how consumers are doing in New Zealand, how much they're buying and how much is coming through across the docks. What does it all mean for interest rates? Well, these numbers are quite volatile, and the big one-offs this month perhaps blow out of the water the big difference between the actual number and the economists' forecasts. And the Reserve Bank is looking for signs of a slowdown, so indications that imports are still strong, particularly consumer goods, won't go down well. But it's not enough to really change the view. Currently, economists are saying that the Reserve Bank will be able to cut interest rates perhaps in September, maybe in December later this year. But until then, we'll have to live with higher interest rates. I'm Bernard Hickey for interest.co.nz. That was the Economic Weather Report.